Yo, yo, yo. Welcome back to the channel. So, I just wanted to make a quick video. It's Saturday, September 25th. Obviously, not a trading day for AMC. This isn't an update. Rather, it's commentary on talking about technical analysis in reference to AMC stock. Because on Twitter and in YouTube comments, I get a lot of people that are telling me things like, AMC isn't a technical play. Technical analysis doesn't matter on AMC. And I understand the sentiment because it comes from a place where, people are basically saying, hey, it's a squeeze play. There's a lot of manipulation in the background, things of that nature. And in another video, maybe I'll discuss a little bit more in detail, like regarding manipulation and everything. But in this video, I just want to make a simple video that proves that technical analysis can be used as a proper guide to understand the price movements that AMC is going through, and help us understand and control our emotions and remain convicted in the play using technical analysis. And what I want to do to prove this point is use Fibonacci retracement and extensions to prove this. And the way that I'm going to do this is I'm going to prove to you that Fibonacci retracements and extensions could have predicted the top as well as the bottom of every AMC move thus far this year. And I think that that's significant because AMC is such a unique play. And there aren't many plays where you can have this explosive 500% type move, especially multiple times per year in the stock price. So if you enjoy the content, if you want to support the content, the best way to support is to watch the video till the end. This is the best way to show the YouTube algorithm that you like this content. As well, obviously drop a like. And if you have any questions or you find this interesting and you want to add a comment to the conversation, feel free to comment down below. You can also follow me on Twitter at David Marino Jr. Without any further ado, let's get into it. So what I'm going to use first is I'm going to use a Fibonacci extension tool that you could have used to predict the top of the run in January. Even though this run in January seems like an incredibly parabolic event, that seems like it was so random and impossible to predict, right? So what you do is you measure from the bottom of a move to the top, and then back down to the bottom of a move. And actually, if you align it with the candles, not the wicks, here on the weekly chart, the body of the candle, you can see here that the 4.236 Fibonacci, which is the top of this particular range that I'm using, and the Fibonacci sequence can go on like infinite. So I'm sure that even using these measurements, we could have predicted the June top. But just for now, we'll show you here that it predicted 1965, and the actual top was $20.47. So I'm not sure what percentage difference that is. What are we talking about here? About not even a 6% difference. Regardless, somewhere between 3 and 6%. Regardless, I think that it's pretty amazing that you could have used any tool to predict this move. And if you look at the 2.618, you can actually predict the close of this candle. And then you can predict the close of the next candle with this 3.618 Fibonacci extension. And this is not a suggestion to be trading at the top, right? Selling at the top or buying at the bottom or anything like that. All I'm doing is showing you how you could have used these tools to understand the moves that are going on with the stock and remain convicted, because I'm a long-term trader. I entered this trade in the April to May zone when it was around $10 to $12. And I remain convicted the entire time. It doesn't matter if it dips. I believe in the play, so I can stick in. So let's measure the next extension. And let's just use the bodies of the candles to remain simple, right? So the bottom of the move, you can see here that the 4.236 extension perfectly predicted $70.12. And if you were to use the wicks of these all the way to the bottom, here, you can see that the 3.618, $72.89. I mean, this is, at least on this chart, as perfect of a prediction as you could ever imagine. And this could have been done before the move ever happened, right? If you would have said that this is the bottom, you would have assumed that after this move and you established this higher low, you would have been able to say, okay, well, with pretty good reason, we can expect that if this thing does move up, it will go up in this, and it can go up as high as this, especially if you refer to the history of it, right? But what about the dips? How could you have predicted the dips? Well, you use a Fibonacci retracement tool, and you measure from the bottom to the top of a move. And actually, this is a bad example, I guess, because we actually did achieve somewhat of a double bottom here, and that's what actually could have sprung this next move up. And so the double bottom would have been your that would have been your signal, like, okay, now I want to start planning for the extension, right? Because a double bottom is a pretty good, strong indicator of a move back up. So I'm sorry about that. So if we use the extension tool, not the extension tool, fuck. Sorry about that. Oh, and by the way, I always get the comments, stop saying you're sorry. It's like a vocal crutch almost. Like if I mess up, it's like it automatically just pops out of my brain. I also got a funny comment where a guy was saying that I say, to be honest with you, right? And he's like, does that mean that you're not being honest any other time? And I'm just saying, like, it's like a vocal crutch, It's kind of like additionally, but I'm scrambling to say it. But anyway, sorry about that. I just wanted to answer some of those comments about that because it's kind of funny to me. Anyway, if you would have measured from the bottom of this move to the top of this move here, you can see here that the 0.786 Fibonacci retracement level, which is $5.88, is where the price stopped going down and then began to climb back up. And then really the key level here is the golden pocket, which is the 0.618 to 0.65 levels, which is, for anybody who's listening, $8.41 to $9.01. This was ultimately where the price felt its most support, and you can also see it getting rejected here at the 0.382, which is the $13.41 level. You can see the price getting shot back down. So you could have easily been accumulating here because you say, okay, look, it's actually finding support here. This is probably a good level to be accumulating AMC stock. So how do we use this in reference to where we're at now? And again, nothing is 100%, right? Anything can happen at any given time. But if you measure from the bottom of the move all the way back in early February after it crashed off of this this run up to $20-ish, down here at the $5.30 range, all the way to the top of the run, $72.81 is how I have it, and you do a retracement, you can see that the stock has not tested below the golden pocket. And as a matter of fact, the lowest wick lands right at $28.92 on the weekly chart. It literally hits the 0.65, which is the bottom of the golden pocket, and it starts to trend back upwards after this. So what does this tell us, right? What does this tell us about what's possible to the upside now that we've found support? And again, this is not a guarantee, but if this pattern continues to play out, and believe me, when I tell you that I can go back and I can analyze, and I'll do a video on this, and I actually have a live stream, my first live stream on this channel, where I go back to the Great Depression, the 1930s, on the SPX, which is the S&P 500, for those who don't know. And these same tools work exactly like they work here with AMC in 2021. Nothing has changed, okay? Fibonacci works, regardless of the algorithms, regardless of tricky whatever you think is going on, right? Manipulation, whatever. And look, I agree that there's manipulation on this stock. But regardless of that, Fibonacci levels are still respected. You can see the price action respect these levels. Look at where the price is turning around. Look at where it's getting rejected, right? It crosses one of these levels and it starts to round over. It starts to roll over, right? So let's go back and find some support. That's what they say. So if we're going to predict the next move up, if we're going to be convicted that the next move is going to be up, which is what I personally believe, we would use a trend-based fib extension. And you can do it a few different ways, right? But I would measure from the bottom of the move after January to the top of the move in June. A more conservative trader would not use wicks. They would use the candle bodies. Again, I'm not a trader, right? I buy and hold. That's what I do. I was diamond hands before there were diamond hands, all right? Before that was a cool thing to say, that's what I was doing. So anyway, that's just me personally. Look, let's just use the bodies and be conservative, right? The highest body that we have here is this $60-ish, $62-ish level, and we'll just round about it. You can see that the 1.618, which is the golden ratio, is at $124. And we also know that historically, AMC in this year, and obviously history doesn't need to repeat itself. It doesn't owe us a repetition. It could go higher than this. It could dip down from here and we could have another accumulation opportunity. But historically, the levels that you would be looking at here are the 3.618, right? That's what we said at the beginning of the video, which is currently sitting at over $200. $236.82. What I want you guys to take from this video is not financial advice, obviously, not trading advice, because I believe that this play, the best way to be in this play, and this is not me telling you what to do with your position or your money, but the best way, in my opinion, to handle this play, this is a play that is emotional and it's hard. This is one of the toughest plays, and it's unfortunate because it's a lot of people's first experience with the stock market. But what I would say is spend some time learning, and not just from me, learning from people who are experienced with technical analysis, who are experienced in these tough conditions. Learn how they remain convicted even when the price has dipped down to these lower levels, down to this $30 range. I was highly confident, and to be honest with you, I was calling for $25 back when it was back here in this $30 range. We only got down to like $28. But I was calling for a pop down to $25. And you know what I would have done with that? I would have been scooping. That's what if you believe in a play, until something fundamentally changes about your belief, until you're fundamentally proven wrong on your belief, then it just sounds like a discount to me. That's how I see it. And I'm going to hold on to this thing until I get what I think I can get out of it. And I don't know what that number is yet, and we're going to do it day by day, just like I do crypto. I've been in crypto since early 2017, and I hold on. And no matter how low it goes, I just keep holding on because I believe in the bigger vision. Until something fundamentally changes about what I believe about it, I will remain in the play. Anyway, if you guys enjoyed the video, thank you so much for hanging out until the end here. I know it was 15 minutes of your time. I hope it was worth it. Hope you learned something. If you appreciate the content, again, the best way to support the channel is to watch my videos. Watch time is by far the most important metric on YouTube. It's what YouTube uses to determine the content they should be recommending to people. So if you think this content would be valuable to yourself going forward, new content from me, or to anybody else, if you think that some people could benefit from watching this content, I encourage you to like and comment on the video. And if you want to look through my channel, I have a few videos that are actually pretty evergreen content. I did post a video yesterday about what my expectations are for next week for AMC stock. So if you want to check that out, it's literally my last video. And other than that, I appreciate your time. Thank you so much for all the support I've gotten on the channel. It's crazy, and also the people who've sent tips. That is crazy. It's honestly insane. So I appreciate you guys so much, and have a good rest of your weekend. And I'll probably have some more videos coming out maybe tomorrow. But I'm gonna go have dinner with the missus, and yeah, have a good time. So probably no more tonight. But anyway, thank you guys so much, and have a good night. Okay. Bye bye.